Okay, great. Thanks for joining us, ladies and gentlemen, on this election day. Kind of a unique time to have a webinar, but what the heck, let's give it a try. And probably a lot of people here have already voted in the US. We're right on time, 11 a.m. Pacific. So with that said, we're going to get started. And I know people are joining as we speak, but that's okay. They can catch up to us. So we can automatically trade in volatile markets, and we can use algos to help us along the way, and we can even do this with options. So you'll want to stick around. We're going to have 2 live demos. Very good, and feel free to ask questions along the way. I'll do my best to get to those when I can, although a lot of the questions do get answered as we go along. So remember, we are speculating and we accept a risk. We're trying to make money here, folks, but we have to assume risk. So prices move up and down, and that's called speculation. So with that said, do take a look at the risk disclosure. All right, very good. The most important thing here is that we should only be using risk capital, and past performance is no guarantee of future results. And that's especially true when you're trading with automated systems and looking at historical performance. So here's our goal. We'll look at technology that experts are using, something you've never seen before, how to diversify among global markets. And we can do this with bull markets, bear markets, and even markets that are going sideways. So you want to end up like this robot here with all his orders already placed in a nanosecond, not like this poor chap here who's struggling, trying to figure out what to trade, what to do, what price, and all that stuff. So 2 new solutions: algo-driven systems trading, automation. We can filter for performance and other variables. We'll show you that. It's one click on and off. And also we have an option trading technology, pre-selected option trades, spreads in particular, trade alerts that are integrated and live with your trading account, something very unique, and automated risk and profit control. So do stick with us to the end. You're gonna, I think, enjoy the presentation. We'll have 2 live demos. We'll have a special offer worth over $32,000, and we can even show you how to get that for free as well. So if you like what you see, we're gonna show you how to take action as we move along and toward the end here. So with that said, remember, markets are always correct, prices are correct, and we aren't, can be very expensive trying to convince the markets that you are right. From Ed Sequoia, he's a system trading pioneer. Great book, Market Wizards. There's Market Wizards 2 as well. Highly recommend both of those books. The old adage, don't fight the tape. You've probably heard that, or trade what the market offers. Absolutely. You don't want to end up like this, still thinking that the market was wrong, and you're already buried underground, taking that slogan with you to the grave. So it is an election year, a big election here today in the US. What's next for the stock market? Just a couple quick things. This article I read here, I thought I would use this headline. What does the stock market do around election day? And we're going to look at some graph on that and some pricing and so forth. And here's a couple of headlines I pulled just from today. Stock market predicts Trump will defeat Biden. And here's today as well, another headline. Stock market's presidential predictor forecast a Biden win, but another measure favors a move back to Trump. So we shall see soon enough. But with that said, we're going to cover a little bit more of that later, but we're going to get into the meat and potatoes here. So look at our agenda. About us, we'll have 3 trading secrets. We'll look at algo trading with a live demo. We'll look at options trading and how we could automate that, and also how we can get you started with a special offer. You won't want to miss that. So stick around and we'll have some FAQs along the way and at the end, at the end. So here we are. We are AltaVest since 1997. We're a registered introducing brokerage firm. All of our staff, of course, are licensed. Here we are, some of our colleagues on the trading floor, options trading pit in Chicago, and you see all the activity here, and it's totally different now, and that's really why we're doing this webinar. Things have changed, folks. The robots are taking over. A little bit more about us. We're regulated, of course, as a brokerage firm. We're located in California. And since 1997, we've traded millions and millions of futures and options contracts along the way. So we have a lot of experience in doing this. So I think really the whole point is you don't want to be the mad scientist trying to figure all this out by yourself. We've done a lot of that heavy lifting for you. All the solutions you'll see are built with decades of experience from industry veterans. So we've poured everything we know into these solutions. So you really are getting decades worth of insight and perspective with the technology we're going to show you. So, and who am I? I am Erik Gebhard. I've been doing this about 29 years now. I'm a co-founder of AltaVest, licensed since 1991. I have my BS in Business Administration from the University of Southern California. All right, very good. I see a few people are asking more and more questions here. And yeah, we'll get to some of these here. A little bit more how I got started. I was during a investments course back at USC, and we started diving into futures and options and other derivatives. There's my textbook. Those are my notes there, and I enjoyed that course an awful lot. So much so that I guess you could say I ended up in the business. We were studying crude oil and gold prices. They had moved a lot as Saddam Hussein had invaded Kuwait. And there's the price of crude oil, I think, doubled just within a week or so. I did graduate with my business degree, and then I became involved in the securities industry. But the futures and options markets kept whispering in my ear. So I was able to get licensed and registered in that space. And I have been there ever since. So there you have it, folks. That's my quick introduction. I won't go on about that, but people always ask, so I thought I would get that out of the way up front here. And with that said, I will go ahead and shut off the webcam for the moment. That way you have more room on the screen. And we're going to jump into 3 trading secrets. Day trading isn't easy. Okay, not much of a secret, but here's the thing. I think a lot of us sort of seem to forget that because there's so much hype and hysteria around day trading. Great article in the Wall Street Journal. There's some other articles in Barron's. There's always great pieces on this. But here's someone you may or may not know of. He kind of came to the forefront here during the COVID lockdown, day trading. He says here, just another 10% day guaranteed when he's day trading. Then, of course, the next day or so, he says, well, it looks like I lost about 4 million. So the point is, folks, easy come, easy go when you're day trading. And here's the success rate. This is from a gentleman who used to trade day traders. 3.5 to 4.5% day trading success rate. And that's after training 300 to 400 people over a 5-year period. Only 14 of those people became consistently profitable day traders. So not trying to discourage anyone from day trading if you're doing it successfully, but need to know that it's really not as easy as it would seem when you're looking at various trading courses or you're watching advertisements on TV, and everyone seems to have some sort of winning formula for day trading. But nonetheless, we're going to show you how we bypass all of that. So here, number 2, stock trading precision. If you think about it, you have to be precise with a lot of variables if you're trading stocks. So what do I mean by that? Well, you have to pick the correct market and the direction, apply the strategy, pick the correct strategy, apply it at the right time at your entry timing and price. Then you have to close it out at the right time, exit your manage your risk and reward. So a lot has to go right. And number 3, this is the biggest non-secret of all, I guess you could say. We are emotional creatures, and those emotions get in our own way. We all feel these emotions when we're trading, let's be honest. But that really is our worst enemy. We have bad wiring. We have a built-in bias to make poor investment decisions, chasing past performance, essentially selling the lows and buying the highs. That's what they're really trying to say. Your brain is killing your returns. That's a great quote, so I thought I'd throw it in there from Real Investment Advice. And then sometimes our worst financial enemies really are ourselves. So Motley Fool says there are 3 common biases when making investment decisions: confirmation, anchoring, and recency. And I think we can all relate to all of these. I'm not going to go into detail on all that, but I think this cartoon sums it up quite well. This guy here says, My stocks are doing great. What else do I need to know? And of course, he has blinders on and he can't see all the negativity in the headlines here that are really saying otherwise. So we're going to look at algo trading. There's no emotion, and algos are really dominating the landscape. 80% of the stock market is dominated by algo trading technology. It's according to an article here from Seeking Alpha this year. And look at this. I thought I'd throw this out there. We all know what happened to the stock market here. This is the S&P 500 in March of this year. COVID pandemic surfaced in a big way. Stock market sold off about 30%, even greater if you're looking at the Nasdaq. But in the meantime, you know what this here, this is the VIX, or referred to as the fear index. So they always have an inverse relationship. Now, how would you survive if you're trading stocks and they're dropping 30% in just a matter of, well, really, it was a couple of weeks, 2 or 3 weeks. So you would have to either be short along the way or be able to day trade in and out quickly. But as we saw, it's not easy to day trade. Here's a trading system. We're going to show you some of these systems in just a minute. But how about an algo system? Look at the performance of this algo system from this March. Just tremendous performance from this particular algo system. And I'm really just trying to point out that whether the moves are up or down, in this case down, with a big expansion in the VIX, you know, algo systems don't care. They don't care if the markets are moving up or down. They're just going to sink their teeth into a move and try to profit on movement, whether it's up or down. And of course, past performance is no guarantee of future results, but we're going to show you some more of that. So we're talking about robots are outwitting humans. Bloomberg article here. That's what we call revolutionary trading. A little humor for us on election day. And here's a grainy old video I took on the trading floor. This is what it used to look like. So that's what it looked like on the trading floor. Looked like a little bit of chaos, but not really. Very effective, very efficient. But here's what it looks like now, folks. This is how trading occurs. No emotion. These machines are running automatically. They have built-in risk controls. So how would you be able to use these machines to help you compete, maybe join the crowd and not try to fight them? So here's the solution. Automated systems trading, user-friendly. You can filter for risk and reward and all various parameters. You can do it in as little as 5 minutes a day. You can automate those risk and profit controls just by clicking the button to on and walking away. Bull markets, bear markets, it doesn't matter. Markets across various parts and various sectors, you name it, we're going to show you that. So time for the live demo here. It's a fresh approach to trading with decades of development. We call it AV systems. Time to meet your new robot friends. And yes, it can be a lot of fun, and it's a very powerful tool as well. We mentioned how you can filter, and we're going to show you all the filtering tools as well. So let's jump into the demo right now. And let me go ahead and shift gears, so give me just a moment. All right, ladies and gentlemen, you are now looking at really the home page for AV systems, and I will go into this here and explain really how to go through this step by step. And by the end of it here, you're going to have, I think, a comfort level with this because it is a very user-friendly platform. All right, let me scoot over. There we go. Okay. Now, first of all, you'll see there are 1,887 systems. That's a lot. And we're not going to worry about going through all those. And you don't have to because you can filter. And let me show you what we're going to do. We're going to go through these steps here. We're going to explore the systems. We're going to show you how to choose systems that suit you, how you would subscribe to a system, And each system on the platform is developed by a particular professional systems developer. So you need to subscribe and basically lease that system and buy the license during the time in which you're using it. And then you would activate it. Once you activate it, you then monitor the performance. And with that said, let's start at number 1. So right now we're looking at a table and 1 through 25 of all the available systems. First of all, you can customize the look of this table. I won't go into all the details here. Let's just kind of randomly delete a few and then show you. Then you just click OK. And now the headings here of the table reflect everything that you chose, that custom view. And then of course you can also sort by ascending or descending, so you can see suggested capital here. And that's the number we always use, by the way, and I'll get to that in a minute. So here's some systems as low as 3,000 and others might be 100 or 200, or here's one 900,000 to trade this system. But don't worry about that. We're not going to even dig into those. Those are very unrealistic, and I'm not even sure. Well, don't worry about those right now. You can see here total P&L. Some numbers are big, ascending, descending, and others are negative because they're in a drawdown or losing. But none of those are, here we go too. Sorry about the stumbling here. I'm getting ahead of myself. Also markets traded. You can see here, that's the British pound. The type of system, there's swing trading and intraday systems available. Starting date, whatever it is, you can customize this any way you want. We'll just go back to default. It's really not important for us right now. I just wanted to show you that it is available. But here's the key. How would you then filter and choose a system? Well, first of all, you can use this box. Maybe you're looking at gold. So now you can see 113 gold systems available. Or maybe you're looking at S&P 500. There's 17 here. And these are more S&P systems, just depending how you type it. Nasdaq, you name it. I don't know, let's say copper. Absolutely. There's soybeans. How many of you are trading soybeans? Probably not a lot, and that's okay, because you don't need to know anything about any of these markets. Remember, the algos do the work. But nonetheless, let's assume you now want to filter for systems. Here's how you really do it. Use this tool here, and there are quick filters here, and you can choose any one of these quick filters and narrow down to a pool or a universe of systems. So here are systems that have been tracked for more than 1 year on the AV Systems platform, and they have profits. So now you're down to a universe of 511 to choose from. And then you could clear that. Maybe you want to do this one here. How about it has clients trading it with live money and required capital of less than 5,000. Okay, there are 53 that meet that criteria. So you can use those quick filters, or you can go ahead and use these advanced filters here. So there's a lot here you can choose from. I won't go into all of it, but perhaps you're looking at an annualized ROI. And let's say something to this. So you have annualized ROI between -13 and 50. And now you have this smaller universe to choose from, and you could keep adding more and more filters. Maybe you're only looking at, let's do this, intraday systems. So they get in and out on the same day. So now there are 696 in this result, this pool of systems available that meet those filters that you've added. So you can keep adding more and more filters, and you can end up with just 5 or 10 systems. And suggested capital. Perhaps you're looking at systems that, let's start with, I don't know, 40,000. 40,000 or less. Okay, so now you can see here there are 290. So you can just keep going on and filtering. And then what you end up with is really the cream of the crop for the systems that really suit you best. And with that said, I won't go on and on into this filtering tool, but you get the idea of how powerful it is. And then you can end up with really the systems that are appropriate for you and not something that someone else is telling you about or telling you is best for you. So I will go ahead and clear all those systems. And then we'll go back to the table here. We'll make sure we'll go back to the default setting. You know, maybe if I expand that a little bit, you can see it. All right, now, if you find a system you like, what do you do? Well, actually, that didn't work. Let me go do this. There we go. So you see this star. If you see any system here that you like that meets those filtering tools, you can then click that star and make it a favorite. So I'm going to filter. You can see I have some that I've already selected as favorites. And this is how you drill down into any system. You just click on it. And here is where the rubber meets the road, as they say. This is really all the core elements and the details and the granularity for every trading system. Now this one's called Atlas Eshr. Here's the name of the developer up here. It's an Emini SP 500 system. It's a swing trading system, $247 a month. It's a little bit on the high side compared to most systems, but remember too, all the performance, and I want to repeat this, all the performance reflected is net of all of the monthly cost and trading commission, okay? It's also based off of this suggested capital figure of 75,000, and it's always going to be higher than the required capital. So all of the performance data is in relation to the suggested capital, and it's always net of all cost, all commissions, and everything. Now let's go ahead and look at a few of these details here. You can see the total P&L. You can get the, click on any icon, get the description for what it means. And you can see the winning session, 61%, your worst drawdown, 17,000, current drawdown at 0, your worst session 7,000, the best session was 17,000, so on and so forth. Percentage of the time with open trades, 26%. So it's not in the market more than, well, about a quarter of the time. It's a swing trading system. So it might get into the market, hang on for a few days, and then get out. Now here we go. This table is important. You can see the key here for the color coding. Back tested is everything in the white background. So all this data here on the table is white with a white background, and that means it's been back tested. Now, if it turns kind of yellow here, this tan color, that means it's now being tracked on the system, on AV Systems platform. And then when it turns green, that means there's a client that's actually using that system with live money. And you can see it went green here briefly in February, had a drawdown, and I wanted to point out here, it had a drawdown in February, and it maybe looks like the person or persons turned off the system, deactivated it, and then look what happened in March. Had a great big winning month here in March. In fact, let's look at the performance, and not that I'm focused on this one particular system, I just want to point out that, remember how we talked about the stock market maybe dropping by a large degree and the VIX shooting up? Well, here's a system trading the E-mini S&P 500, a swing trading system. And here is the performance from March. You can see here the license cost came out of the account, and it is prorated, by the way, depending on when you get in or when you get out. But so it starts off with a losing trade, then it has a nice winner, another loser, a nice big winner, loser, winner, losing, 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 and some big, big winners here. And by the end of the month, the accumulated P&L, it had done very well. You can see the equity curve here, a bit choppy as it's having various gains and losses, and that's pretty typical when you're trading. Well, anything really, you're gonna have a lot of variation in your performance typically, especially when you're trading a stock market index. So wanted just to point that out, how you can have a non-correlated performance. So once again, March, you see the stock market dropping, and here you see a system that performed very well. And then you can see here it's been tracked on the system since, and then it just went live again in October and November and is doing just fine. So that is the Atlas ESHR. That's the name of that one. Perhaps you want to look at a couple more, and we won't go too much further. Here's one on the Nasdaq. Here's suggested capital of 30,000. And here's a Nasdaq system, and it's a swing trading system, and it's $80 a month. You can see that here. And here's the performance. And this is live performance since February, doing quite well. And you can see in March, it had a good month in March with live data. It had just a few trades, but that's all it needed. And some of these trading systems are very active. This one here has positions 15% of the time. So it gets into the market and gets out, and then it waits for a new signal. It might be just patiently waiting. And all the background data here is white from backtested. Then it was on the platform in January, and then it's been live ever since. Now here you can get even more granular. Nothing is hidden from you. You get to see exactly what's happening. And you can see all the history. You can even download the history. But you'll notice here, sell stop, selling one, that means you're flat into the day with zero, and here's the price, and so on and so forth. Or the session log, you can look at it day by day. Here's August 19, trading volume of 1, end of day position is 1, hypothetical P&L, it gives you all the numbers, and then it tells you day by day what happened in this particular system. So you can see everything that's happening and nothing is hidden from you. And I'll look at one more, and then I'll show you how to go live and monitor your performance. This one here, I don't know, let's look at a silver trading system. Yeah, this one here, remember, has been doing great, but does have a higher monthly cost, $455, suggested capital 95,000. And look at the performance here. Look in March, had a big month in March based on its historical track record here that, since it's being tracked on the platform. This is all live. This is all live performance. And this is all net of all fees and commissions. Look at August here, and look at September. Those are really some pretty dramatic months there, but you can see the day-by-day P&L, and you can notice some of these swings are pretty big. Here's a swing of $10,000 profitable after a loss of $7,900. So the better the performance of any particular system, there's going to be more volatility. That's just the way it goes. So if you're not comfortable with some of the swings in some of the systems, then that's fine. You can find other systems that don't have as much volatility day by day. Now, if you were to, let's jump on this one here, let's just go back to it here. If you liked the system, this is what you do. You see this padlock here? You can click on it from the home screen, or you can buy a license. So click on that padlock, and then you would agree for that license to come to be deducted directly from your account. So you'd subscribe to that, and you would read the disclaimer there, click accept, and let's see what happens here. We purchased the license, and this is just a demo account. I don't even know if I have, I guess you could call it fake demo bucks right now, but let's go ahead and activate it. You can choose to immediately activate that system. The multiplier is 1 unit or 1 contract. You accept that disclaimer there. And if it doesn't activate, that's fine too, because that really is a risk control. Because if you don't have enough money in your account, then you won't be allowed to activate everything at will or on your own whim. So it worked, and now here it is. In fact, let me close that, And let me show you where to find it. So now you've activated it. We're on step 4 here. Monitor that performance. You go to My Systems. And there, that's where you'll find it. And you'll see it's currently flat, no position. And you can see fills, orders, performance, whatnot. We can get back in time if you want. You can go backwards in time and look at everything. But so that's where you would find it. Now here is how you deactivate it. You would just click there and stop strategy, and you can choose to stop it immediately. And depending on the system, you might even be able to simply not take the next new signal to enter, but just get out on the next exit. And that's how you would deactivate it. So it's just that simple. And here is the top 10. This is a great feature here. So here is the current session. These are the top 10 performers for today. This is all live. You can see it flashing there and updating. So the best system is the Atlas ES, the one we looked at actually for today. $6,200 profitable as we speak. Here in the previous session, you can see the best performers. And last month, and of course last year, and since 2001. So this is kind of a section, fun section to look at if you're looking for ideas on top performers, historically speaking. But remember too, having done well, yesterday or whatever, doesn't mean it's going to do well the next day, but it might be a good starting point. All right, with that said, let's see here. I see a bunch of questions, and I think that I'll be able to answer some of those here as we move along. Just a second here. Yes, someone's asking me about the fees. Yes, the fees for the systems are always taken into account. Here's just randomly click on this crude oil system. So suggested capital is 30,000 and the cost is $50 a month, and that's deducted straight from your account. And it's also prorated. And remember, all the performance is based off the suggested capital amount, and it also takes into account all of your monthly licensing fees and the trading commissions as well. And you can see here, this one actually is doing just fine year to date, up 33%. And you can see all of the back-tested data here. It has a lot of history of back-testing. Actually, it's pretty big numbers. And the numbers in back-testing, by the way, I want to point out that they account for the maximum amount of slippage, and they account for all of the trading cost already. So they're very conservative in their back-tested results, and they want those results to parallel any real results moving forward. Otherwise, why would anyone bother? So we find that the results of backtesting and tracked performance parallel, what we would get with live performance. So it's a very, very high correlation. And you can see here the live data here so far this year, a little bit ahead probably if you were to look at all the live data only. But anyway, just wanted to point that out. Now, with that said, let me jump ahead to the next section of the presentation. So maybe you feel a little bit like that poor kid drinking from the fire hose. I hope not, but there's a lot of information there, but actually it's very simple and user-friendly. And we have a lot of clients that absolutely love using the AV Systems platform. It's a very powerful tool. Now, with that said, here's what some of you are thinking. I'm reading your mind. You're thinking, I love it, I want to do it, but I've never traded futures. Well, here's my answer. It doesn't matter because the algos do all the trading. So my point is, you don't need to know about the fundamentals of the crop report or where the moving averages are on any chart. The algos are trading for you. So you filter based on criteria that meet your needs, you activate the system, and you walk away. And then when you choose to deactivate it for whatever reason, you just click that one button and that's it. I've had clients that have activated and walked away for more than literally a year and done nothing. And then others that get more involved and they activate systems and they might deactivate, weekly. So it just depends on you. So precious metals, algos, energy, stock market, currencies, you name it. Futures volume, this is where you want to be, folks. Almost 22 billion contracts in the first half of this year. There's liquidity, transparency, leverage. It's an alternative asset class. You can diversify with this. The non-correlated returns, we talked about that. You look at the stock market dropping like a rock, but look at the performance of the past performance of some of those systems that were trading even in the precious metals or in the stock market indices. The algos don't care. They're just as easily short as they are long, and they're cost effective. So here we go. We're going to jump into options trading and automating your options trading with a secret strategy and a technology solution. Up, down, non-directional markets, it doesn't matter. We're going to trade stock index options. So we'll remove the guesswork. We'll remove all that guesswork when you're trading options. We know how it is. You've got a million different possibilities when you're trading options. So why are we trading stock market indexes and not individual stocks? First of all, it's convenient to follow just a couple of different indices. Index is less volatile, and we have a secret strategy that really is only applicable in futures options, and I'll show you that here. Here's the one market we love to trade, the Emini SP 500, the ES. It's liquid, efficient, cost-effective, and I'll show you why in just a moment, some more details on that. But look at this, average daily volume, 780,000. That was first half of this year. So I think the numbers are even greater now. Looking at insurance companies, jumping to options, sort of the language of options, switching gears just a little bit. So how can we trade the ES like an insurance company might? Well, we know how the insurance companies make money. They collect premiums. They're selling time. They insure themselves. They're consistent and they're patient. They look at probabilities, favorable long-term odds. So they're just looking at statistics. We're not going to go into that, but basically math. That's all they do. So casinos do the same thing. All these games of chance are, of course, all biased in favor of the house. You spin that roulette wheel enough times, you're going to lose 200 bucks. If you do that 38 times, betting 100 bucks. Average dollar loss of $5.26 per spin, and that becomes the house edge. So they would love to have you sit at their table for years and years and years and keep spinning that wheel into infinity, because that's how much they're going to make off you. And they do that even though they will pay out winnings at times. So they will lose at times. So looking at a baseball analogy, what's the higher probability outcome? A base hit or a grand slam? I think we know the answer. So option strategies, what can we do with high probability strategies? What are high probability strategies? Well, we collect premiums by selling options. We need to be consistent and patient, manage our risk. We will have losers, manage reward, not getting greedy, and we need the proper tools. You have to make technology work for you, or else it's going to be overwhelming. So that's what we're going to show you. Non-directional, bullish and bearish strategies, high probability outcomes with predetermined risk. So credit spreads, if you know this, it goes quickly. If you don't know it, it's easy. So either way, there's something here for everyone. We're going to get to the demo in just a second. I have to provide a little context. We're doing only credit spreads, meaning the positions are insured or covered, predetermined risk and reward, and they might be non-directional. Here's an example, and I'll show you this in the demo, but here's this margin of error. Here's the S&P 500 trading in this range. Here's an upper boundary of the trade and a lower boundary. If you've never seen this or know what it means, don't worry, I'll show you. And a quick discussion on a couple of the Greeks that we need to know. These are super simple. We're not going into double derivatives or anything like that. Other people do, that's fine, but we don't need to. Delta, what the heck is a delta? Well, it's the approximate probability of an option expiring in the money. So a 0.25 delta means 25% chance, 25% chance of expiring in the money, 75% chance of expiring worthless. So delta is always moving with price and time, and it is not the probability of a winning trade. So do remember that. People kind of conflate that. And then there's theta. That's time decay. So you're speaking of options, you speak of time decay as a negative number called theta. 1 day of time decay. So what am I talking about? Here's an option at 10 points. If the theta is negative 0.05, that means the next day, the premium is now 9.95. The next day after that, 9.90, and so on and so forth. So that's that simple. That's what it looks like sort of on a graph, just an illustration. As you approach time 0, you'll see the value of that option drop and drop and drop because it's losing time. There's less time for the market to move favorably on behalf of that option. So here's a call spread. Selling a call spread, here's the S&P sitting here in this example around 3,300. Sell a 35.30 call, you receive 4.5 points. You simultaneously buy a 35.50 call, you pay 2.25. The net premium result is $112.50 that you collect minus your commissions. Same thing with the put. Here's the S&P trading up here. You sell an out of the money put spread, collect a net premium of $100. Simple stuff, and we're going to build on that. Remember, these are not naked options. I want you to make sure that we're not trading naked options. Our risk is predetermined and capped. These are covered spreads. So you really don't want to be naked. And here's one of the reasons, well, really, it's a matter of risk, and that's reflected in margin. If you're doing naked options, you're going to end up in all sorts of a world of hurt with margin calls. It's going to happen over and over and over again. It's a mess. We don't do it, and I wouldn't recommend it. Here's an iron condor. It's simply a combination of the put spread and call spread that I just showed you. And you're thinking, what is a crazy name like that doing here? It's just the way it looks on a graph with the wings, but we're not even going to get into that. Don't have to. Here's what it looks like. Here's the Emini SP trading along here, sideways, up, down, doesn't matter. You sold calls, a call spread here, you sold a put spread here, collected money on both sides, and you want that market to stay in that range. So you have a pretty wide margin of error. Now here's a secret strategy, and yes, I think it is a secret. That's not an understatement. It's because we developed this, and that's our name. We call it a dragonfly. And it's a variation on a condor. And here's what it looks like. If you think this chart looks crazy, bear with me, I'll explain it. Okay, let's focus on just the calls here right now. Don't worry about the puts. Here's the structure of a dragonfly. You sell 4 calls and 4 puts. And once again, we'll just focus here. 4 calls, and at the same time you buy 3 further out of the money calls, and you buy 1 closer to the money call compared to the ones that you sold. So the one you buy here is always going to be much closer to the money compared to the 4 that you sold. And in this case, the 32.90 call is 40 points closer to the money compared to the 4 call options that you sold. So what'll happen is, if the market's moving higher and higher and getting closer to these short calls that you sold and kind of adding risk to your position, the value of this one call that you own will gain in value more quickly than the further out of the money calls that you sold, because it's obviously 40 points closer to the money. And also theta decay will not impact it as much. It will hold its value much better. So it creates a completely different dynamic compared to an iron condor. And I'm going to run through a simulation and show you some examples. There's also directional strategies you can do. What we call a bear hedge, simply selling an out-of-the-money call spread, taking the money you receive, and then buying an out-of-the-money put spread. So if the market drops quickly enough, this position would gain nicely in value. And the same thing if you're bullish, you could simply buy an out-of-the-money call spread, but to pay for it, you could sell an out-of-the-money put spread. Of course, the trick is which strikes to choose and which expirations and what's the pricing. So just like Jackie Chan is confused, how would you know where to start, what to sell, what to buy, what's the price? How do you know when to buy and sell, when to get out, how to manage risk and profits? Here's the answer, folks. Theta Trader. This is pre-built credit and debit spreads. Proprietary algo creates what we call Theta Trades. So these are bull, bear, and flat market strategies with automation for risk and profit management, something called the risk thermal indicator. That's our color-coded profit and risk management system. So we're going to jump into a demo on Theta Trader. So just give me one moment. Okay, we are looking at the dashboard for Theta Trader. Now let me see if I can kind of expand that a bit. There, make it easier. I know if I look at webinars and people have all sorts of tiny little things on the screen trying to show me stuff, I just kind of, I don't know, I lose my focus. So hopefully this is big enough for everybody. It's about as big as I can get it in terms of the visibility here. Now, we have Theta Trades at the top, open short positions here, open bot positions, and this would be your account info here in our demo account, and then current price quotes. The best thing to do is just start here at the top. Theta Trades, this is what the algo generates every day. Bullish strategies, bearish and neutral. You can see we have the ES, the NQ, which is Nasdaq, and the Russell 2000. So those are the indices that Theta Trader is built and designed for trading those stock market indexes. And we looked at iron condors in the presentation earlier. So here are all of today's Theta Trades. These are pre-populated. The robot has built the trade for us. You can see anywhere from 16 to 59 days till expiration. And the strike prices are all pre-selected. I'll show you in a second here. We'll drill down and get a little bit deeper into each trade. Profit potential at expiration and your targeted annualized return at expiration. Remember, it's not realistic to expect these types of returns annualized because that would assume you're just rolling over that same trade every 16 days and making the maximum profit. But what this is here for, it's just so you might be able to compare one trade to another. So that's why that number is there. Okay. Let's drill down on this December in the month position or Theta trade. First thing I like to do is look at a chart. Give me perspective here. Here's the call spread and here's the put spread that you're selling. Here where the current price is. And we can look at this table. You can see the market, days till expiration, expiration date, the settlement value, the premium, put risk, call risk, commission, capital, cash required, profit potential, and then here's your targeted return on cash and your targeted annualized return. And I'll point out that the money required to place this trade is essentially the put risk, which is the maximum you could lose if, the world went to just, the stock market went to zero, and minus the premium you received. So really the cash required here is 886. That's your cash required to place this trade, and your maximum potential is 114. So here's the question I get. Why would you risk 886 to make 114? Well, here's the answer. We're selling these puts, these 2670 puts. The delta is 9.97. So that means there's over a 90% probability that this particular option would expire out of the money. The 3740 calls that we're selling, the delta is even lower, 6.88%. So you have really a 93% probability that these calls that you sell would expire out of the money. So those are the higher probability outcomes that we're looking for. And we also always recommend closing out the position before expiration. We never hold on to these short positions all the way through expiration, and I'll show you how we can automate that. Now it's pre-populated here as a sell because we're selling the Condor and collecting premium. Quantity always defaults to 1. Let's just say we're doing 4 of those. And you can see now all the numbers increase by a factor of 4. We'll leave the pricing there alone at 270, and we'll go ahead and place that order. And you can see it there showing up under your today's order. Just assumes you're filled in this demo account. Now there's a feature called, back on the dashboard, we'll go back there. There's also a trade simulator. You can go backwards in time and you can test all the strategies that you want. And here's the simulator, and I've loaded a few simulations already. And I want to show you the difference between a Condor and a Dragonfly using the simulator. So first of all, let's look at this Iron Condor trade. This is from August 14 of 2017. And I already pointed out that we close out trades before expiration, whether it's for a gain or a loss, but we can automate that process. So let me show you here. You can use these buttons to play the chart forward. You could skip all the way to the end or just go step forward one at a time, but let's go ahead and play this forward and I'll explain to you what's happening. So you can see day by day is going on and trades starting to turn profitable, and this RTI is green. So that means good, do nothing. The algo says just watch, do nothing, and theta decay is working. So far so good. Okay, now it turns blue. What does that mean? Take profits. Now here's the key. With Theta Trader, you can automate. You can automate your profit taking and your basically your risk. So I'll show you how to set that up. Just really simple, but I want to point out that it's important that you automate your risk controls, because if you try to override the risk controls and second guess the algo, you're kind of really defeating the whole purpose. And you can take a winning trade like this. Blue means take profits. You've got enough profit out of the trade according to the algo. If you just bypassed it and ignored it and kept hanging into the trade, turns yellow, slightly elevated risk, the market's moving closer to your upper boundary, this short call here. Okay, now it's green, so even though you're losing money, the algo still, well, at this point it's green, but it did tell you already to take profits. And look at that, it turns red, too much risk, get out. So that's why you want to automate this so that whenever it turns blue, it automatically closes that position out for you and you can take your profits and move on to the next trade. A lot of times, if you ignore that kind of profit-taking signal, you're going to take a winning trade and turn it into a losing trade, just like what happened here. All right, now let's look at a Condor and compare it to a Dragonfly. But before I do that, just want to show you how easy it is to place a Dragonfly. No different. December into month. Once again, we'll look at a chart. You can see the perspective there on that Dragonfly. Only difference here is that you're always selling a minimum of 4 calls and 4 puts. And the cash required is always going to be reflected as higher because of that. You're selling 4, not 1. So the cash required is 45.64. The profit potential, of course, is greater, 436. Targeted return on cash and your TAR always going to be a little bit lower than a Condor. And that's because you're paying money to buy this closer to the money call and closer to the money put. So that's a bit of an expense, and it's almost like paying a little more for insurance. And that's the reason why the the targeted returns are just going to be a little bit less. But there's a trade-off because also that insurance can pay off. And I'll show you that in a second. So set here to sell. Quantity of 1 is always the default. Let's just say we'll do 2 of them. And we'll go ahead and place that order. And there it shows up. Now with that done, let's go look at another comparison here between, or look at a comparison between a Condor and a Dragonfly. So far, so good. Nothing really to do. Yellow means elevated risk, but still do nothing. You can see why. It's getting close to that upper boundary. And then it turns red. So here's a losing trade. You end up sitting in this trade, and on the 16th, with 16 days left till expiration, it signals red, and you get out, you take your loss, and move on. And that was a Condor. And remember that Condor was placed on November 20 of last year in this example. Now, what if you did a Dragonfly on November 20? So instead of a Condor, you had placed a Dragonfly. Let's check it out. Look at that. It turns profitable with about a month of time remaining. It gives you a blue signal to take profits and move on and take your profits and go to the next trade. So compared to a Condor, you can see that it has a completely different dynamic. In fact, on January 3rd, it gave you a profit-taking signal. And on January 3rd here on a Condor, you were actually still losing just a little bit of money. So just want to point out the big difference at times, depending on market conditions. It's not always going to be that way, but this is when this long call or long put can really work in your favor. It changes the risk-adjusted return dynamics and the parameters for trades tremendously under these types of market conditions. You could also see here, 32.90 call is 40 points closer to the money compared to the 33.30s that you sold. And the algo will change that. At times it might be a 30 point, 40 point, 50 point difference, and it'll be reflected symmetrically on the puts as well. But that's the power of the Dragonfly. We love the Dragonfly. We'd like to do as many of those as we can. It's not to say we don't do Condors as well, but the Dragonfly does tend to behave better in some of these circumstances that might otherwise cause a Condor to lose. So you're thinking, okay, how do I automate this? Well, you go up to My Account. Well, in fact, I did it here. My Account, go to Settings. Here you go. Activate your Risk Manager. Activate Profit Directive. And now everything is automated. Theta Trader will handle the rest for you, and you just save your settings. And that's how easy it is to use the RTI and automate it. And so that Theta Trader will really handle that exit for you. Also want to point out that we have video tutorials, we have video education, and we also have research, proprietary research. We have TradeScope. We do that every day with technical analysis as well as fundamental and an outlook moving forward. And we also have our daily trading outline here. Give you all the quotes and of course any activity for the day. And then we're looking at a summary of Asia, of Europe, of the US, what to look for going forward. And that's done every day as well. And then with that said, let me jump back to the dashboard and point out a couple things, and then we'll get to the best feature of all. Now you can see at a glance on your home page all your open short option positions, okay? And you can see the open bought positions because you can also buy premium, and I'll show you that in a second. I just wanted to point that out. But if you're bullish, for example, we talked about a bull hedge in the presentation a few minutes ago. For example, November into month. And there's what a bull hedge would look like. So you buy this call spread, sell this put spread, just that simple. Or if you were bearish, you could do just buy outright puts. You could buy some put spreads. And also, for example, if you're bearish, what else could you do? You could sell call spreads, but they're all pre-built for you. That's what I want to point out. Everything's pre-built, no matter what the market is. You don't have to try to figure out which strikes to use, what the pricing is, what expiration, and so on and so forth. But also, let's jump over real quick so you can look at a full page of your open positions here. So here's a summary, 13 open positions that are short, 2 that are long, your current P&L on the positions, and you can see each line, each one of these lines here is a particular open trade. If you wanted to look at this Condor trade more deeply, you just go ahead and click on it and scroll down. You can see here the graph of how that trade is doing. Placed it on October 1st, and so far so good. And if you wanted to exit that trade, you could override the RTI just by clicking that button and placing the order. Now here is all your closed positions. If you want a history of all your trades, so you can see a summary here, total trades on the page, 20, 15 winners, 5 losers on this demo account, so on and so forth. But this is how you would view the history. You could look at any one trade, you just click on it and scroll down, and you can see here when you placed it on August 28th, and you can see the RTI was green all the way through, and then it turned blue and took profits in that particular case. So there's probably more I could get into, but I won't at the moment because that's really the baseline that you would have to know with Theta Trader. It's really that simple. But here is going to be the best feature of all. So let me switch gears on you. Okay, folks, a little bit of humor, hopefully. Kind of reminded me of Lucy and Ethel trying to keep up. A lot of information, I get it. But here's the best feature of all. We can make it easier. These are the trade alerts. These are 1-minute trading, and that's no joke. One-touch trading, accept or reject. And let me show you how that works. It's because the alerts are live. They're already integrated with your AltaVest account. So all you do is you see the alert, you just touch accept or reject, and that's it. You don't have to log into another platform. You don't have to try to transpose or copy an order. And then, of course, you saw how Theta Trader can automatically then track and manage your positions. So here's what it looks like. You receive a text message with a link. You'll click that link. You'll see a graph. You'll see a brief description of the trade. Here's your account, the net premium collected, cash required, and look at this, selling 10. The quantity is already pre-sized for your account. It's all done for you via Theta Trader and the technology. You don't even have to do anything. You can see the days till expiration, your targeted annualized return, get a current price quote. It's all right there in the alert. And if you like it, you touch accept. And if you didn't like it, you touch reject. Just that easy. Let's look at that one more time. All right, so there you have it, folks. That was the best feature of all, I think, for Theta Trader. And people absolutely love those trade alerts. They're live and they're integrated. And I mean, you talk about convenient. You know, we get people, our clients tell us, "Oh yeah, I was out in the mountains. I was out golfing." All the cliches, we hear it all. "Oh, I was with my family. I just saw the alert and touched accept." That's all you have to do. So here we go. Here's the special offer you need. It's called our VIP membership. Let me review everything you get. You have AV systems. You saw the automated futures trading. You saw how powerful that was. Nearly 20 years of R&D, professional system developers, thousands of system robots, US and some global markets as well across multiple sectors. Like that light switch on or off, it's that easy. Everything's transparent. You're in full control. Everything's automated. Intraday or swing systems, you can review your live system performance. You can download history, play with the data if you want. Just about any market sector is available on AV systems. So if you want to develop your own system, how about one programmer to build one algo for one market? What would that cost you? Well, ask us how we know. It's a lot. Professionals charge a lot for their services, and that's fine, but that's just for one programmer, one system, $10,800. Now, how about the A-list? We call it our A-list research. These are the top picks from us, and you want to know if your systems are on the A-list. We work with clients in allocating systems across their account. That research available, $2,952 is that proprietary research. So you have AV Systems platform, the A-list research, a value of over $13,700. Now remember, you also have Theta Trader. You just saw the options trading solution. The algorithm builds those option trades for you. So you have Theta Trades. They're pre-built, simple and effective, simple trade tracking. Here's what a brokerage statement looks like, and here's what it looks like on Theta Trader. In fact, this is the same since I've been in the business. It's kind of a joke, but Theta Trader has the RTI. Remember, automatically exit your trades. We call autopilot, non-emotional trading. It turns blue, your profit is triggered. If it turns red, your risk is triggered. It's all automated. Everything's done for you. You check that box, and that's it. Remember the trade simulator. We ran through a couple simulations. It's a lot of fun to use that. It's a powerful tool. People have a lot of fun with it, and I could spend hours on it, but of course, you don't have hours. But you can do all the back testing you want. So remember, you have Theta Trades, the RTI, the trade simulator. That software worth over $3,588 per year. And then here's the best feature, trade alerts. Remember, these are integrated with your trading account, completely unique. Completely unique. You won't see this anywhere. There's plenty of people with trade alert services, but you know how that is. You get an email or a text and it's all clunky and it's kind of ridiculous, really. But we set this up and designed it to work seamlessly with our technology, and people absolutely love these trade alerts. Yearly value of at least $4,464, and that's because I've talked to people and I know how much they're spending on trade alerts. So remember, Theta Trader offers you the Theta Trader software as well as the trade alerts, a value of over $8,000. So with your VIP membership, just to summarize, you have AV System software, the Algo Trading, Theta Trader software that includes the trade alerts, a value of over $21,000. And here's the best part, the private coach. So as part of our VIP team, you have access to your own private licensed and experienced trading coach. You'll have 1-hour screen sharing sessions. If you're serious about learning and doing this, and even if you already know a lot, that's fine too. We can work with you at any level. Some of the private coaching sessions among systems and Theta Trader for some examples here. And we just work with you really on whatever topic you want, but these are some examples of what we laid out and what some people like to discuss. Now remember, you have onboarding with your co-pilot, you develop a relationship, you get to work with that person along the way as you're trading, discuss history, review trade history, discuss trades, you name it. $7,500, in fact, that's way undervalued. Why do I know that? Because I look online, I talk to people in the business. You know, people are selling education for $25,000. And okay, that's fine. I'm not opposed to education, but what we're saying is, as a VIP member, we include with your membership what you need to know to be able to trade with us and trade options and futures. So to summarize your VIP membership, AV System software, Theta Trader software, Trade Alerts, the Trading Coach, a value of over $29,000. And then, you know, it's a little bit corny, but I thought I'd throw the, you know, but wait, there's more. Here's the research. Don't forget, we talked about the research. That's proprietary. It's from AltInvest, yearly value of $2,952. And then, of course, you saw the online video tutorials and education as well. But a value of $32,000 for that VIP membership. So even at 50% off, it would be a great, great value. I think you would agree. And I think it could be the one thing for you that really works, save you time. You can cancel subscriptions and save probably a lot of money. You could lower your stress and aggravation. And we do hear that from people about how much easier it is. So yeah, absolutely. So people have paid tens of thousands for algo systems and options trading software and trade alerts. And I know this. I've paid tens of thousands in the past. In fact, I know I talked to people that have paid $25,000 and $50,000 for trading systems. So here's the VIP offer, AV Systems and Theta Trader together. In the past, we didn't offer them together, but here's what you need for your VIP membership, not $19.97. We can do better than that. 60% discount before Friday night. It's a one-time payment of only $7.97, and that would get you a VIP membership, lifetime membership. Here is the link, cf.altivest.com/VIP. And there's our phone number if you want to chat with us. Either way is fine, or sometimes most people find it easier just to go right to the website and get started. Now, here's no excuse. You have a 30-day guarantee. So really your satisfaction is guaranteed. If you don't like it, we'll refund that membership fee, $7.97. And yes, it's true. It's not just something we say. It is a one-on-one boutique style of service, and quantities are limited. So that one-time payment, $7.97. Now we'll jump into a few FAQs, and then we'll show you something here as we wrap it up about the election markets and how they've acted in the past. So just one moment. There we go. Can I trade stock options? People ask. Nope, we trade the E-minis, S&P, Nasdaq, and Russell. Remember, we talked about why, and we'll show you a little bit more. And how about lowering your tax rate? Yes, they are tax efficient, trading futures and options. What am I talking about? They're called 1256. That's how they're categorized according to the IRS, the contracts we trade. So essentially, you have an over 10 percentage point advantage. And let me show you why. You're trading individual stocks. You have 100 grand, you make 20%. You're going to have a 12.6% return if you're in the highest tax bracket. You're doing futures and futures options with us. Your rate of return is 14.64%, tax savings of over $2,000, just because you're trading in a more efficient, tax efficient market, and no more itemizing when you're trading futures and options. Yes, you can use a self-directed IRA, absolutely. Article in Forbes I read recently gives the ability to diversify a portfolio by adding investments with a low correlation to stocks and bonds. Can help retirement investors control volatility and limit downside risk. So you'd want to determine if you think it's a viable investment opportunity for you with your self-directed IRA. Remember, S&P 500, it's a huge market, and this is the futures market we're talking about. Now look at this. The E-mini S&P 500 alone, just on its own, outtrades all the ETFs around the world by over 2.5 times. You can see that here. S&P E-mini compared to all ETFs, over 2.5 times greater in terms of average daily dollar volume. And just compared to the SPY, everyone talks about the SPY and stock index, stock trading and whatnot. Nope, sorry. The E-mini S&P is where it's at, folks. Almost 10 times greater in terms of the dollar volume. So this is really where you want to be. And why are we trading the E-minis? They're liquid, they're efficient, they're cost effective. What are the advantages? Deep liquidity, 630,000 average daily volume, largest market share. You have all the strike prices you need, 100 annual expirations, ensure granularity. And what I mean by that is if you want to build a Condor or let's say a Dragonfly on a particular stock, you're not going to be able to do it, especially a Dragonfly. The availability of the strike prices is just not there. And also another advantage, we're just tracking a couple, 2 or 3 markets, not thousands. Margin use is efficient, and it's a clear cost structure when you trade in the futures and futures option space. And what am I talking about? We'll give you an example in just a second here. ES options also offer superior execution, a cost savings of $4 to $15 per contract compared to SPX options. That means tighter bid offer spreads. And there's no hidden cost when you're trading ES options. These are not securities. Repeat, we're not trading securities. We trade at the CME group with these options on the electronic Globex exchange, and that means all orders are treated equally. Every order that comes in, whether it's a small order or a big order, it's all treated the same, and there's none of that payment for order flow nonsense like with the stock market. So what am I talking about? The hidden cost of stock trading. Robinhood makes millions selling out their customers to the high-frequency traders. They make millions of cash income by selling their customer orders to the high-frequency trading meat grinder. High-frequency traders are not charities. The only reason high-frequency traders would pay Robinhood tens to hundreds of millions of dollars is that they can exploit the retail customers. So folks, that's what's happening with your orders, whether it's Robinhood or any other stock brokerage. So it's Robinhood making money off of the day trading millennials. Yes, that's the point. It's Tinder for money, they call it. It's kind of funny. And there's no such thing as a free lunch. Schwab and others, it says here, the retail stock brokerages. Remember, stock brokerages are not charities. They make up lost commission revenue in other ways, buried down in the guts of their workflow processes where few people notice. So my point is, folks, that if you're trading stocks, that's fine. We all trade stocks, but it's not free. Let's just make that clear. Like this guy says here from Barron's, there's nothing of value is truly ever free. I think we could all agree on that. So what is the leads us to the question, what are the commission rates? Our rates are very, very competitive. The E-mini rate's 5.25, and that's round turn all in. Let me repeat, round turn all in. That's flat. That's it. So if you go online, you see a big box brokerage firm like I did here. I copied their rates here. They say, oh, well, we're 225. Well, that's per contract. Then they add exchange and clearing fees, and it ends up being higher than what we charge. So when they say per contract, that's per side. 225 when you're in, 225 when you're out, plus you pay all the exchange and things, and it ends up being more than the total of what we charge. So anyway, we're not trying to compete on price with others anyway. We're a totally different service. We're a boutique. We have real people. We're not chatbots, and we have experience, and that's what you're gaining with us. Completely different level of personal service and attention. What's the performance of Theta Trader? Well, Theta Trader is just a software platform for self-directed clients that make their own trading decisions. So everyone trades differently. And remember, all performance is net of trading costs. So whether that's in AV systems or with Theta Trader. And what size of account for a VIP membership? We suggest 50,000 to 100,000 and divide that between AV systems and Theta Trader. A lot of people like to have money in both, and we agree. We think they complement each other well. And how about a free account, a free VIP membership? Yes, open with 100,000 or more, we'll gladly refund that membership fee. trading account types. All right, sorry folks, I hit muted for a second. There was an ambulance screaming past us here in the office. Okay, Jim Rogers, famous investor, says the next bear market will be the worst in at least 78 years. It's good to be old, he says. Young people have a very bleak future ahead of them. A bit cynical, but I thought I'd throw that in there because I think that sort of makes the case for why you need alternatives in your portfolio. They will improve diversification and lower portfolio risk. They have a low correlation to traditional investments. They can have potential to improve the risk and return profile of a portfolio. That may help grow an investor's total return. So looking at the election year, it is election day. If you're here in the US, hope everyone gets out there and does what they need to do. But for the moment, what's next for the stock market? Well, I thought I'd throw a couple things out there. Here's a graph of election year seasonality on the S&P 500. You can see blue is the election year, and then this pink is the average year. So here we are in beginning November, and according to the election year seasonality, maybe you get a bit of a dip in the S&P, but then by mid-November, we start to rally again. So we shall see. And here's a graph here. This is the S&P 500 7-day median return in election and non-election years. So what this means here is you see the blue line is an election year. You're heading towards the election here at time 0, which is today. And look at that. You see the median return. So you're getting up to this 2% level here right ahead of the election. And then as the election happens, kind of the air comes out of the balloon, at least historically speaking. So kind of interesting. And then it starts to go up and chop around a bit in the days following. So I don't know if there's any really clear-cut answer to that, at least historically, but I thought it was interesting. So here's what you want to avoid, folks. You don't want to be long delusions, wishful thinking, and FOMO. So that's the whole point of the presentation. There are alternatives that have an absolute return characteristics. You don't have to rely 100% on traditional asset classes. So we love the alternative investment space. And you'd want to know if your portfolio is all stocks and bonds perhaps, or cash. But we like number 3, bit of stocks, bit of bonds, and some alternatives. We'd like to be a part of that alternative slice of the pie for you. So here's to summarize the VIP membership. You have AV Systems, automated trading, Theta Trader with algo-driven options. That software there pre-selects your spreads, automates your trade exits, and has integrated trade alerts. And to wrap it all up is a personal coaching. I think that alone is well worth your VIP membership. We'd love to have you join us, be part of our winning team if you're serious about long-term success. And there we have the final bit of the presentation. There is the link, cf.altivest.com/VIP. And let me see if I can put that in the chat. And I think there were a few more questions. Give me just a second here. I'm trying to do this all by myself today. Okay, there's the link for that. And yeah, thanks for all the questions. There's a lot, actually. Okay, here we go. Someone's asking about the Dragonfly. No, it's not the same as a butterfly. It's a totally different trade structure, and you can find out really just by looking at the, for example, the trade simulator would be a great thing to do, is to look at the trade structure within the simulator and back test it that way, and or of course just look at any particular theta trade, and you'll see that you can look at the graph on any theta trade, whether it's a dragonfly or a butterfly, and you'll see a totally different structure there. Someone's asking here about something else. No, we are the brokerage firm, and this is our technology and our software. So the VIP membership is really our service. We don't brand. We don't have a different brand somewhere else. And yeah, you may not. Someone's asking about trading with it. No, we are the brokerage firm. So if you have brokerage accounts elsewhere, you wouldn't be able to use our technology. So the technology is ours, and we are the brokerage firm, and you would have an account with AltaVest, and no different than any other brokerage account. You just fill out the documentation and add money, and you're on your way to using the software. Okay, and the 797, yes, people always ask. It's one time, not one time every year, but just one time. The VIP membership is a one-time payment of 797, and we get you that discount expiring Friday night. So you'd want to jump on board, get that discount while it's available through Friday. Otherwise, the typical retail price is $19.97. And also, I point out when we do close out the webinar here in just a brief moment, I'd love to get your feedback. There's a survey that comes out when you close it. I'd love to get your feedback, good, bad, or otherwise. And yes, there is a recording for the webinar that will be distributed. Thanks for asking about that. And depending on what country you live in, you may or may not be able to have an account with us. Canadians, unfortunately, we can't work with. Most countries in the EU, we are not able to work with, but we can work with some countries in the EU, obviously in the, well, not obviously, but for example, in the UK. And we have a lot of clients actually in Australia and New Zealand as well. And let's take a look. Yes, you're welcome to call us at our phone number there. Email us at the email address info@altavest.com. And then, of course, you see our link I put in the chat field. All right, let's see here. I think that's probably going to wrap it up. A lot of the questions we've already covered. Oh, there's a good question. No, there are no data charges. Everything is web-based. That's correct. And there you have it, folks. No, very good. Thanks for all those questions. And the Dragonfly, yes, the Dragonfly is a different risk-reward characteristic compared to the Condor, and that's because you're paying money to buy the closer to the money calls and puts. So that costs you a little bit. You give up a little potential gain for a little bit of lower risk is really just the way to look at that. All right, very good. We'd love to hear from you. You can call us, you can email us, you can go right to the website there, that link, become a member, and remember 30-day guarantee. If it's not for you, you just sign up and you decide it's not for you, that's fine. I mean, we're not gonna force you to trade with us. And yeah, it's a one-time payment. Someone asked that earlier. It's one time, $797, and it's just that simple. All right, great, folks. Thanks for joining us, and have a great rest of the day, and we will sign off for the moment. Thanks. Bye-bye.